And the Treasury Department is out with new rules for investors who want to take advantage of a big new tax break for financing development in poor neighborhoods. They're called opportunity zones, and Treasury Secretary Steven Mnuchin estimates they could draw $100 billion in private capital. Now, investors can defer taxes on capital gains that are reinvested into these funds for up to 8 years. They can also discount those gains by up to 15%. And if investors hold their stake in these funds for 10 years, any additional gains are completely tax-free. Treasury said today that only capital gains are eligible for this special treatment. As for who can invest, it's open to individuals, corporations, REITs, estates. There has been a lot of early interest in these funds. One investor we spoke with said he's already begun soft-circling about $50 million here. But guys, this is a completely new program, so a lot of investors have been waiting for these rules as a green light from Treasury. An official said that he does expect the regs to get finalized in the spring. Back over to you.
Isn't this a HUD program, Ylan? Isn't this something that Secretary Ben Carson has been talking about as well?
No, this is something that is completely new. It was created under the new Republican tax law as a way to try to draw investment into some of these underserved areas. Now, there are obviously many different programs across the government for trying to achieve that same goal, but this is a new program that gives big tax breaks to investors in exchange for trying to finance some of those developments.
Ylan, do you know how they identify a low-income area? What are they using as the metrics to sort of identify it and the borders of it?
Yeah, this was up to the states to decide. So states could nominate different census tracts within their own borders and then submit that to the Treasury Department in order to get certified and in order for those areas to receive this type of financing. Now, there's a lot of debate over some of these neighborhoods and whether or not they really do deserve that type of designation and whether some of this money might not have been flowing into these areas already. But what the Treasury Department says is that these are high poverty areas that have poverty rates well above the national average and includes basically all of Puerto Rico.